Okay, value added tax. Okay. Please concentrate, because there's a few things about VAT that they can ask you, and I want you to understand VAT when we are done today. VAT was first introduced on the 30th of September 1991 at 10% and increased to 14% in 1993. Value-added tax, or VAT, is an indirect tax. An indirect tax which is payable on the supply of goods and services, or services made by a VAT vendor. So before you can do anything with VAT, you must first register. And if you register, then you're a VAT vendor. It is an important source of revenue for the South African national budget. It is utilized to provide for education, social development, housing, health, and water. Who must register? Who must register? It is compulsory to register if your turnover is more than R1 million a year. Then you must register. If your turnover is less than R1 million, okay, this is a new one, but more than 50,000, not 20 anymore, but more than 50,000, then you can register voluntary. Okay, so if your turnover, not your profit, your turnover is more than R1 million a year, then you must register. Otherwise, you can decide if you want to register. There's exempt items and zero-rated items. Exempt items, by law, are not subjected to VAT and will never be. Never ever. That is private sales of personal or domestic items, salaries and wages, hobbies, rent of a private house, financial services, transport by road or rail, educational services provided by the government, and services provided by associations not for gain. Exempt items, no VAT on that. Zero-rated items, this is at the moment 0%. It's at the moment 0%, but the Minister of Finance can adjust this percentage at any time. So he can wake up tomorrow morning and he can decide, okay, I want to put VAT on that zero-rated items, that things that persons need, like food, and I can put like 5% or whatever VAT on that. So zero-rated is at the moment 0%, but it can change at any time. Brown bread, maize products, rice, lentils, dried beans, fruit and vegetables, milk, milk powders, cooking oil, eggs, canned pilchards, paraffin, petrol and diesel. Okay, they are subject to fuel levies, but no VAT on them. It's very important to know this, because if they ask you a question where they want you to subtract the VAT from the salaries and wages, then you must know that salaries and wages haven't got any VAT on them. Methods of calculating how VAT is paid and claimed. We've got the payments basis. The vendor only accounts for VAT on actual payments made and actual payments received. So this is only on money. But in the school syllabus, we don't use the payment basis. But you must know that there is another basis. So whenever you pay or receive money, then they are going to calculate the VAT. The vendor must apply in writing to source if he wants to register on the payments basis. So in general, it's only a few people that register on this basis, and they must ask in writing and give a reason. We do the invoice basis on this in the school syllabus. The invoice basis means that the moment that the transaction took place, then we are going to do the VAT. VAT vendors must account for the full amount of VAT included in the selling price of goods and services the moment the invoice was issued. If we sold on credit, and we don't receive the money yet, then we show the VAT because the transaction already occurred. All vendors are automatically registered on the invoice basis unless the vendor asks in writing for the payments basis. Different types of tax, I'm not going to read through that. I want to show you your VAT calculations. There's only 4 calculations. Okay, if I gave you the amount exclusive of VAT, that means that I give you the amount of 450. Give you the amount of 450. And that amount is exclusive of VAT. For example, 450 was given. That's 450 rand. There's no VAT on that 450 rand, so that is VAT excluded. VAT excluded. Now they can ask you 2 things. They can ask you the VAT, or they can ask you the included amount. The included amount. If they ask you the VAT, you take the 450 and you times it by 14%. Times it by 14%, that gives you 450 times 14%, that gives you 63 rand VAT. If they ask you the inclusive amount, it is 450 times 114 over 100. And that will include the 450 times 115 over 100, and that gives you 513. 513, which is the same as, this is the same as 450 plus 63. That gives you 513. So if the amount exclusive was given to you, then you work with 14 over 114. And you work with 114 over 100. It depends on what they are looking for. There's your calculations. To calculate the VAT amount, times 14 over 100. That gives you the 63 rand. To calculate the inclusive amount, times 114 over 100, and that gives you 513. When the amount inclusive of VAT was given, so now they gave you the 513 rand, and they mentioned that this is VAT inclusive. They can ask you 2 things. They can ask you the VAT amount, or they can ask you the excluded amount. $513 times 14 over 114. What is the meaning of that? It means that the 513 that you see there already included the VAT. And the VAT inclusive is 114. So we are looking for 14 of the 114. So that gives you 513 times 14 of the 114. And that gives you 63 VAT. Exactly the same as the one on top, where they gave you the 450 and they asked you the VAT, and that was 63. This one is 513, and we are looking for 100 of the 114. 100 of the 114, and that gives you 513 times 100 divided by 114, and that gives you 450. And that was the original amount that we started with. There's your calculations. This is the only calculations that you have to do in VAT. Make sure when you've got the excluded amount that you times 100, that you times 14 over 100 and 114 over 100. And when you've got the inclusive amount, this means inclusive. The 100 means exclusive of VAT. The 114 means inclusive of VAT.